Hi, everyone, and welcome to Gigging Out, a podcast about the people and businesses leading the gig economy. I'm Dana Gagnon, CMO at Every, and today I'm thrilled to welcome Mike Meyers, co-founder and CEO of Reflex. Reflex is an on-demand staffing platform for retail. Mike and I had a great discussion about the disruption happening in retail and how on-demand staffing is changing how the industry thinks about labor. Mike shares how they attract retailers and associates to their platform, how they think about sustainable growth, and why creating a culture that puts workers first is critical to their success. I know you'll love this discussion. Enjoy. All right, Mike, I'm so thrilled to have you today on Gigging Out. Thanks for being here.
Thanks, Dana. Super excited to be here and really appreciate the opportunity. I've been looking forward to it today.
Yeah, of course. So I'm really excited to talk about Reflex. But before we go there, I would love to first learn a little bit about your background. You started working at a couple different marketplaces in the earlier days. Can you talk about your experience prior to Reflex?
Yeah, absolutely. I dipped my toes into tech actually in college. And, I always knew I wanted to be an entrepreneur. I mean, if you ask my family, I had entrepreneurial tendencies at a very young age. But I was working my way through college and didn't know when I was going to start my first company, and actually kind of stumbled into startups my last year of undergrad. And I was trying to pay for my college tuition and was selling items I didn't need anymore. And so my first company was actually another marketplace, and it was a hyperlocal peer-to-peer way where students could safely buy and sell goods and services on campus. And so that was 2013. Ended up, winning a couple pitch competitions. We got a little bit of traction. So I actually took that on full time when I graduated. We raised some capital. And so I pretty much jumped right into startup world out of college and worked on my first company for about 4 years. Long story short there, I think we built a great product, not a great business. Unit economics, you can imagine, if you have college students as buyers and sellers, you're losing them every 3 to 4 years, and monetizing peer-to-peer transactions is tough when people want to see things in person. So learned a lot through that experience, but ultimately that company failed, and came up with a lot of learning lessons in and of itself. From there, jumped into another role. One of our investors at the time had another portfolio company, and then actually left the founder side of the table to join ATX Venture Partners and switched to the other side of the table, and actually spent the last couple of years doing early stage venture. And so, I moved to Austin, Texas, joined ATX, and at the time we were just raising Fund 3, which was a $100 million pre-seed through Series A fund. And, split my time between the investment team and then actually built our post-investment team. And so, leading up to Reflex, that was kind of my step and exploration into startups, and one thing kind of led to another. And as a founder that gets into VC, you can quickly imagine that you get the itch to want to build again. And that's exactly what happened. And next thing you know, that's where Reflex came from.
Yeah, I was going to ask, when did that itch happen? What was it that started the inspiration for Reflex?
It was one of those things where, you get the itch to want to build. And when I looked at even why I wanted to go into venture, I'd been interested in the investment space for quite some time, but I looked at it as an opportunity of how do I go learn from, call it 30, 40 CEOs at once, meet potential co-founders, potential investors, and frankly, give myself kind of the intellectual treadmill time to go figure out what I wanted to build next. And so, when you look at what's happened, I joined ATX very beginning of 2019. When you look at kind of how the world started changing and as the gig economy was evolving, I was digging in a lot into the future of work and looking at a lot in the space. There was a venture partner and LP that we were also doing a lot in retail tech at the time. And a venture partner and LP used to lead the consumer retail team at McKinsey for about 15 years. So him and I were spending a lot of time together, and all of that kind of was happening behind the scenes. And the founding story of Reflex, the catalyst moment, was I was in an Uber a month before COVID, February 2020. Had no idea how the world was going to change in 30 days. And my Uber driver happened to work in retail. And, I had worked in restaurants, hospitality growing up, different hourly jobs. So I understood kind of the lack of flexibility. But when I say I've never met someone so excited and passionate about working in retail, this guy lit up. And I, of course, asked him out of the curiosity. I was like, well, why are you driving for Uber if you love retail so much? And he starts telling me about how he's saving for his daughter's college tuition. And he wishes there was a more flexible way to work in retail. But if he were to go try to get a part-time job at another retailer, they would make him guarantee 15, 20, 25 hours a week that he has to be available. But there's no guarantee he would get those hours. And on top of that, there's no guarantee if he did get hours that it would be on the days that worked with his schedule. So you can imagine, visualize us pulling up to a stoplight and him kind of holding up his phone and saying, it's a lot easier just to turn on, my phone, choose when and where I work, and make it work with my schedule. And so I got out of that Uber and called that venture partner I mentioned, this guy, Dave Ritter. I was like, Dave, this seems way too obvious when you look at the gig economy. It's expanding outside of driving and delivery into nursing, construction, oil and gas, warehousing, hospitality. But when you think brick and mortar customer facing retail, it's one of the largest employment sectors in the country and in the world. How come the gig economy hasn't expanded into the same stores that we see at our favorite shopping centers, malls, and so on? And so that was kind of the founding story, and that set off a chain reaction of events that led to where we are now.
I love that story. I'm curious, did you stay in touch with your Uber driver? Have you told him about Reflex? Hopefully he's at least found you organically.
I get that question all the time. I'm trying to track him down. I have not yet, and there's probably a way to go back in and look. It's that's at the top of my list to figure out. So if he's listening, maybe he's listening to the podcast. Hey, let's chat.
That's amazing. So you have this idea. Little did you know a pandemic was about to happen. What were the early days like? Can you talk about the first few months as you're building Reflex? Like, where did you start and what were some of those initial challenges?
Yeah, so great question. The early days, it wasn't like there was this idea and it was like, I'm quitting my job, leaving the firm, and like going to build right away. A lot of it was I'd already been digging into the space, but a lot of it was the intellectual curiosity around just how do we go talk to retailers and understand, because retail is such a vast industry. I mean, you have big box, you have specialty, you have soft lines, hard lines. You can get into furniture, you can get into convenience stores and apparel. And so one of the things we did really early on was, I was spending pretty much nights and weekends outside of my job talking to folks that were working in these different retail segments and just learning about the space. And a lot of that exploration happened, nights and weekends from February 2020. Obviously, COVID hit, and pretty much through the end of the year into Q4. And one of those conversations we had was with a well-known apparel brand, Vineyard Vines, and one of the regional directors we were talking to there leaned in and he was like, "This is really interesting." And so we started talking more and more about it. And he basically outlined, he was like, "Look, this sounds like something that like we would be interested in at least testing out. I have to loop in the right folks, but we'd be interested in a pilot." And it was in that moment, call it October, November timeframe, that it was like, okay, there's something here. Let's start putting feelers out. And by end of year, I started to pull together a co-founding team. Going into January, I told my firm that I was going to be leaving to pursue, something new. And, that same quarter, Vineyard Vine said, "Hey, we want to work with you." And so a lot of it really came together. But the early days, it wasn't like we had this clear outline of what Reflex was. It was more of what problem are we solving for these retailers and why is now the right time and how do we get a better understanding of how they work with their labor models today.
So when you were doing that discovery work and talking to different sectors within retail, did it become apparent pretty quickly to start in one like sector of retail or one geographic location? Like, how did you think about where to start?
Absolutely. And I also realized I got so excited to dive in with you. I didn't even really say like what Reflex is.
Oh yeah. Yeah. Define Reflex for the audience. Yeah.
If you think of really what we're building, Reflex is a marketplace that connects retailers with the best local retail talent on demand. And you'll notice it's specific to retail talent because we're not trying to take the warehouse worker or the delivery person and teach them how to work in retail, but we're helping folks that have the soft skills, that have already worked in retail, know how to engage in that environment, helping them unlock flexibility in a way they've never had it before. And so, workers can work on Reflex, and basically, the reason why we're able to track the talent we do, workers can choose when they work, where they work, at their favorite brands, get paid within 24 hours instead of 2 weeks, thanks to our partnership, and even unlock the same brand discounts they would get as a regular part-time employee. And if you look at really what draws people into retail, it's not the hourly rate. I mean, You can go pick up a part-time retail job, and most retail brands will pay $12 to $15 an hour in Texas. You could go find a part-time job at an Amazon warehouse making 50 to 80% more than that, if not higher. And so it's not the highest paying role, but a lot of what draws people in is that brand discount and wanting to be in that environment. And so we've seen, the value for a worker, and where we're getting a lot of traction is it's flexibility more than anything else. And it's also being able to work in an environment, but still be in control of your schedule.
So you signed up Vineyard Vines early 2021. What was going through your head when you locked in your first retailer?
Ironically, Vineyard Vines ended up being the 9th retailer we signed and went live with. So there's a longer story there, but I think with startups in general, I mean, and I know you can relate to this. You typically have a plan, and then all of a sudden things change, and so a lot of it's bobbing and weaving and figuring out how to get to market. And when we sign a deal with a national brand, we're not going and signing up the local store. We're signing enterprise agreements. And so they take longer. But I mean, like J. Crew is a customer, Faraday, Everlane, Fossil. These aren't smaller brands. And so when we sign those agreements, we essentially are green lighting additional stores for expansion. And so we don't have to constantly resell every time we want to launch a market, which when we talk like go to market, it becomes a really interesting dialogue because unlike most gig economy companies, at least when you look at gig economy 1.0, our demand is always preceded wherever we want to go. And so we're a supply constrained business, not a demand constrained business. A lot to unpack there, but going back to some of those initial conversations and what that was like, there's this evolution we see with retail. So if you think of the pain points with these retailers, their labor models haven't changed in decades. They typically have their full-timers, they layer on their part-timers, they book schedules 2 to 3 weeks in advance. And if you think of what happens in the four walls of retail, everything in that 2-week period blows up. You have call-outs, you have shipment that gets delivered, you have shipment show up when you think it's coming in 5 days and it comes in 2 days, and vice versa. You have peak times where you're all of a sudden understaffed. And then when you layer on what's happening in e-commerce, over 30% of e-com orders in the apparel segment are being fulfilled at store levels. So when you think of omni fulfillment, that can be shipped from store. So you buy something online, it gets shipped from store. You have BOPIS, which is buy online, pick up in store. Curbside, all these trends that were accelerated through COVID, that requires an in-store labor force. But historical labor models have never staffed for that. So we're getting really lucky from a timing standpoint, where part of the reason why we're able to have these enterprise conversations going into where brands are finding us and how those early conversations progressed. So much of that comes down to retailers are under pressure from a P&L standpoint, and their labor models, where they feel like there's a labor shortage because workers want flexibility. Their labor models aren't working, and there's a lot of inefficiencies and waste with that. Employee retention is at some of the worst levels it's been at, and so they're open to flexibility now in a way that they haven't been before, and that's really where we've seen a lot of these early conversations pick up.
That's super interesting. Yeah, I could see how, I think retail has gone through such a pivot in the last decade, really, when e-commerce has blown up, but then with COVID, and to think about how that's altered the kind of roles you need. I've done seasonal retail before in my 20s out of college, around Christmas time. And just my friend was actually the manager of a store. And so she convinced her friends to come work seasonally, but that's not sustainable. So I can imagine that was a really obvious win for you is, seasonal help, but then these also filling these more immediate needs that aren't always met by the existing staff.
That's really cool that you've worked in retail and that you can relate to that, because you know how chaotic it can be, especially around seasonal times. And the funny thing with seasonal is, retailers, and it's not just Q4, there's different seasonal spikes throughout the year, depending on location, type of retailer, but retailers will staff up and try to hire all these seasonal folks only 6 to 8 weeks later to say, hey, by the way, we got to let you go. So it's not only really expensive to do that, but it's good luck finding these people. And what we've seen is there's this, the light bulb moment that we typically see with retailers. There's kind of two transitions in their behavior with us. At first, they kind of view us as a Band-Aid, where retailers have kind of this way of thinking where they're like, okay, there's no way you can find people on demand that are as good as our people, because there's so much that goes into training. Once they see that our people are not just a warm body or a warehouse worker or someone that works in hospitality, someone that's never worked in retail, once they see that these are retail professionals and people that know how to talk to customers, they go from using us as like this band-aid, what I would call a call-out solution, where there's a call-out, maybe there's a no-show, there's extra shipment. It's kind of, there's this reactive, urgent fire that they need help with. And we actually see this shift where we become part of their labor model. And so what we're starting to see is retailers, instead of staffing 100% to plan, and by the way, staffing 100% to a plan that is archaic and outdated and isn't even right to begin with, they're staffing 80% to plan and only flexing up when the business requires it, since labor is correlated to top line sales. So when they need it, they can flex to 105%, they can flex to 95%. When they don't need it, they can run more minimum levels. And so that saving not only translates to what they see in their P&L with profitability within four walls, but you're now not also stuck giving, Sally hours Tuesday and Thursday because you really need Sally to work on Saturday and overspending on labor that you don't need.
That's brilliant. I would love to dive into the worker experience a bit. How are you? Well, first of all, I would love to talk about, how are you finding workers? How are you driving demand for that supply side?
Great question. And I think to take a step back, if you really think about what Reflex is and what we're building, and I think this plays into it, we're not, I know when I introduce us, we're a marketplace and we connect retailers with on-demand talent. Really what we're building is the best way to work in retail. And what that means is workers have not only access to flexibility, but they also have access to certainty. And if we think of what quality of life is, it's the combination of both. And so it's the flexibility to be able to control your time, but it's the certainty to know that you can get paid quickly, that you can find the hours you need, and that you can always plan your work around your life as opposed to your life around your work. And so our North Star as a company and everything we do and everything we build on the worker experience, the product, everything that goes into that, it's about putting the worker first. And it's about making sure that they're in control of their time and that worker experience takes priority over everything else. Because we believe if you create the best way to work in retail and it's an unparalleled brand and work experience, that's not only going to attract and retain the best talent, but that will also then help us attract and retain the best brands. And it doesn't start with putting the worker last, it starts with putting them first. And I think that's something that the gig economy, it went through its natural evolution, but there's this shift happening where gig economy 1.0, it was very transactional and it didn't create a lot of loyalty. This next version of what we're calling the flex economy, obviously we're biased there, but the flex economy is really about putting the worker first and building a true community and a brand and an experience that, we want workers to not think, oh, I work in retail on Reflex. We want them to feel like, hey, I'm a Reflexer and I'm part of the Reflex community. And so because we've put such a strong investment in that, we're seeing that word of mouth is our primary driver for worker acquisition. It's been frankly really exciting and humbling to also see, our workers referring other workers, posting about us on social, and a lot of user-generated content that's really driving that. And, we've only activated less than 6% of our worker signups, given both the interest and demand we've seen from workers, as well as the momentum we've seen from our retailers.
Wow, you can't beat that. Word of mouth and organic user content. It's trusted more. People are going to believe it, and then it's also cost effective, right? It's free.
Yeah, it's definitely valuable in that way. I also don't want to pretend like we have it all figured out. We've only been live for, call it, almost 16 months in market. And so there's so much that we still have to learn and we are learning, and there's a lot that we still have to navigate. But I think it comes down to, it's easy to work through a lot of the unit economics and worker acquisition pieces when you're putting the worker first and really building out the right worker experience. And, I think those investments there pay long-term dividends. And, we're testing some paid social. We haven't really done a lot of that because we haven't needed to. But I think there's some obvious areas where we can lean in on paid social when you think Instagram, TikTok, and kind of where content is today, and the natural user generated content we're seeing already plays into that. And so we're starting to explore that more, but we don't have anyone on our team right now fully dedicated to marketing. So we're working on that.
You mentioned training, and I would love to just talk through what is the vetting process, or how are you maybe training, or can you just talk a little bit about how you're prepping the on-demand workers for their retail jobs?
I think training is an interesting piece because I think, and you all can relate to this. I mean, if you're going to try to build a company that changes an industry, you have to fundamentally believe things to be true that everyone else thinks is false. And so, I think when you think through that dynamic, one of the biggest hurdles that we've had to navigate is this perception of training with retailers. And they say, well, there's no way you could take someone that's never worked in my store before and put them on the floor and have them in a place where they can talk to customers. That's preposterous. And then you ask them, you're like, well, how do you train your seasonal people? And they go, oh, we don't.
You're like, wait a second, this doesn't compute. Yeah.
And then you also ask, you're like, well, how long, like, what's your training content look like for your part-time associates when you hire them? They're never going to be, as trained as your full-timers, but how do you train your part-timers? And it's, well, we have a couple of videos we make them watch, or, oh, well, we have a PDF or binder we give them when they come in, or we just kind of put them on the sales floor, and it's a lot of on-the-job training. And so what we've been building out and what we've productized is we actually partner with brands to deliver micro trainings for workers ahead of their shift. And so if you're a Reflexer working on Reflex and you accept a shift at Everlane or Faraday, say, in Austin, once you accept that shift and you claim it, you unlock the ability to get access to the training that you need to have before that flex. And it's not just like how to talk to customers and about the brand, but that training also includes, what do you need to know for your shift? What should the dress code be? Where do you park? What's the brand discount? Return policy? It's basically, how do we get workers comfortable where if they're walking in to a store for the first time, we can eliminate that first day jitters where they feel excited and empowered to walk in as opposed to scared of feeling like it's constantly the first day of work. And so that training piece is a really key part. And you can imagine long-term where this is going is imagine, say I want to work in retail and I don't have as much retail experience. Maybe I want to go pick up a shift at Nike or Lululemon, and they're not customers yet, but using that as an example. If I want to go pick up a shift there, what if I can go proactively take a training course that not only gives me a certification, but then unlocks my ability to pick up a shift there? We're leaning very heavily into gamification. And I mean, that's where my co-founder comes from. He was leading product at a company called Arcade, which was actually a portfolio company of my old firm. And so, they did, and they're focused on frontline employee gamification. And so Carson's bringing a lot of that through the product lens into how we're building training out long-term. To kind of backtrack a couple steps prior to that, when you look at how we find and vet workers, there's multiple gates we put workers through before they ever get access to a shift. When you sign up, you don't get access right away. You have to, create your account, let us know what your retail experience is, and based on several factors and criteria, depending on open availability, where you've worked in the past, and other factors, you'll get invited off the wait list. And once you're invited off the wait list, then you can then book an onboarding with our team. And we put every worker through an onboarding call where we're actually, personally talking to the workers, getting to know them, their story, what they're looking for, also interviewing and vetting them. And if they get past the onboarding call and a couple other steps, including a background check, then only at that point do they get access to the marketplace. So our quality control is really tight. Reflex is not for everyone that just needs an hourly job. That's not what we are. But if you're, great with soft skills and you love working in retail, then you'll make it through. And, to date, over 95% of our workers are asked to return back after a second shift by the store manager.
I was going to ask, what is that repeated cycle for workers? Do you find that a lot of your workers are going back to the same stores? Are they going to multiple stores? A little bit of both?
It's really interesting depending on demographics. Flexibility is the most important thing to our workforce. And so you'll notice that they'll prioritize times that work for their schedule over a certain brand most of the time. There's exceptions. We're fortunate from a unit economic standpoint. We think we turn net positive in the second shift. And so our push when we sign on a worker is how do we get someone into their first 2 to 3 shifts right away, and balancing marketplace liquidity in that way. We see workers. I mean, there's a worker in Austin coming to mind. Her name's Mary. We'll call her Mary M. I won't disclose her last name, but Mary is a young mom in her 20s. And, she needs flexible hours. Her husband works during the day. And with her toddlers, she needs, hours that work for her. And she used to work in retail, but left retail because it no longer worked for her schedule. And Mary's worked closing in on, I think, 180 shifts on Reflex since signing up, across over 22, 23 stores now. And so when you think of that, that's just in Austin. We have workers like Mary that are working 100, 200 shifts, are consistently working on Reflex across multiple stores. We also have some workers that they have their rotation of 3 to 5 brands that they really like, and they kind of stay within those. But we don't ever see a worker just stay at one brand. They like the idea of being able to try different stores. And that also translates to us, where we have a huge responsibility as a company and a community to protect the brands that we let on Reflex, where we've turned away certain retailers that aren't the right fit. We've also fired a couple customers that weren't creating the right experience for our workers. And we get feedback after every shift. You can tell I get really excited and passionate about this because like this is at the heartbeat of what we're doing. But we collect feedback not just about the worker from the store manager, but we actually ask the worker, how do you enjoy working at that store? And so with that, we have a high bar where we're also holding our retailers accountable where, if we want to build the best way to work in retail, that's two-way accountability. And so we're very specific with what brands we work with, and making sure that they're creating an experience that, workers are excited to go back in the store.
I love that. I don't, I think you assume startup, you're going to take any client you possibly can onboard. But the fact that you're holding them accountable too, and you have this criteria and this expectation to create that work experience is really, really cool. Can you talk about some of the things that would disqualify a retailer at a high level, maybe?
I'll give you a high level, vague example. You can read between the lines on a scenario, but I'll be very, very upfront and say like we haven't had a single issue with any national brands that we work with because the standard that they have is so high, and the way that they create a work environment is just much more professional. We do support local like SMBs and like mid to high end boutiques. And so when you have like a mom and pop owned retailer, there's different dynamics that go into that. And, there was a scenario where we're getting feedback from some of our best workers, and it was consistent, like shift after shift, that there was a local store on Reflex that was just running workers wild. And like workers wanted to take a water break and use the restroom. And the manager it was very authoritative, and frankly, it was just not a cool work environment for them. And they basically said, hey, I want to let you know I don't want to go back to this retailer, because we asked the workers, do you want to return back to this retailer? And we kept getting that feedback. So we reached out and talked to the store and said, hey, listen, we're getting this feedback. This is the kind of experience we're creating, and these are the values that we ask our workers to uphold, but these are also the values that we ask our retail partners to uphold as part of the community. And we kind of got a message that was like, well, I'm paying you to help fill shifts and this is what we need. And, we basically decided that wasn't the kind of partner we wanted to work with. And so, I think at the end of the day, protecting the worker experience and the culture, it's so easy, I think, sometimes to lose sight of that, just as a startup where you're trying to grow and you're trying to, hit targets and numbers. But at the end of the day, numbers don't matter without people. And, I think really putting people first and being hyper focused on the vertical we're going after, like as cliche as it sounds, like that's how you win. And that's why, if you ask anyone on our team, like, what is Reflex or what are you guys building? Every single person on the team will tell you unanimously, we're building the best way to work in retail. And it always starts with a worker.
You mentioned vertical. Are you sticking in the apparel side of retail? Have you guys thought about, or are you already branching out into other verticals? And maybe how do you think about that, and what maybe would prevent you from going into other verticals within retail?
It's funny that you asked that, because I got a message this morning from a fairly large restaurant group, the CEO actually, saying, hey, have you thought about restaurants? Would love to chat. They saw a write-up about us the other week. And, I think what came with that, as flattering as that is, we're not going to go into restaurants. We're not going to go into hospitality. We're not going to go into warehousing. We're trying to be everything to someone versus something to everyone. And that comes down to being hyper-focused on customer-facing retail, where there's a high emphasis on the customer experience, a strong brand story to tell, and also a growing e-com business where you tend to see omni-fulfillment at the store level. And so we're focused on apparel right now, and a certain segment of apparel brands. We've ventured into, we're venturing in right now to footwear, to accessories. But the constant theme is when you think through the kind of stores you would see at, here in Austin, think the Domain or South Congress, or in Dallas, think North Park Mall. Those are the kind of brands that we're partnering with, and some are a little more high end than others. I mean, we just signed Rag and Bone. We're in the process of going live with them. We also support outlet businesses, but it's a segment of retail where when someone says, "I want to work, at an apparel lifestyle brand," they can find that. The only reason why we're able to do that is the market's huge. When you think of, at the end of the day, if you think of who we're really competing with, we're not competing with the other gig economy companies that are providing like warm body, because retailers don't want that. We're not competing with the staffing agencies that try to use technology to be a better staffing agency. We're not competing with temp agencies, because a lot of these retailers, they don't want to use temp agencies. We're competing with retailers themselves and helping them understand that there's a better way to structure their labor, and they can lower their fixed cost and lean on a more variable model that really unlocks, uh, you know, huge savings and ROI in their store model. And as we're learning how to do that with brands, you're seeing these retailers where they're shifting their labor models and using us to flex in real time. And so that's really the behavior change that we're competing with. And we're fortunate that, we're getting some really good data on it. We still got a long way to go, but our retail partners we're working with, like, I'm convinced we have some of the best customers in retail.
Yeah, it's probably pretty easy to measure the ROI of your service. And, you talk about word of mouth on the worker side, but there's probably this word of mouth on the retailer side. Like, it feels like a very obvious solution for some of their problems. How did you figure out how to price it for them? Can you talk a little bit about that? Are you entering into like set contracts? Is it all based on the amount of hours worked and it's a markup? Can you talk about the pricing model a little bit?
We're still figuring some of that out, and so, and where it becomes dynamic is different markets require different pricing. I mean, retailers don't pay the same in every state, and so we're working with our retail partners through that. We're charging less than temp agencies. I mean, typically, see the markups you see with a temp agency is much higher. And right now our revenue model is tied to a take rate on hours worked. We've set up our model in a way where, in the future there might be additional fees, monthly fees for certain functionality, or setup fees. We don't have any of that now. And so to turn on as a retailer, it's, look, only pay for the labor you use. When it works, pay for it. And if not, there's no obligation or minimum to use us. And we're starting to see some of our national brands, because of the traction we're building with them, they're starting to prepay us for hours into like a bank, which is helping from a cash flow standpoint and a growth standpoint. But at a high level, the idea with the retailer is they're only paying for the labor they use when they need it. And, that cost to use Reflex is built into an hourly rate that's easy to track, understand, and easy for their stores to budget for.
It looks like your corporate team, you've built out people with a lot of retail background. Can you talk about why it was important to bring people from traditional retail into the Reflex corporate team?
Absolutely. I love that question too, because again, if going back to, if you think of what we're building and the best way to work in retail, if you want to build the best way to work in retail, not only do you have to understand retail, but you also have to understand where it's broken, and you have to understand where it's really working, and where some of that magic that draws people into wanting to work at the best brands, like, where does that come from? And so many folks from our team come from some of the best brands in retail and experience there. And so we're able to pull on that. There's kind of two flavors when you look at how the team is broken down, when you look at like experience. So two flavors of experience. You have the retail folks. They come from stores. They come from leading retail teams. They've managed store teams. They've overseen regions. They're retail operators. And that's been really important when you think of the worker experience and the retailer partner experience we want to create, and building that out, because they understand the pain point and they've lived it. Jeremy on our team, who is on our store success team and actually leads our store success team. Jeremy was actually one of our first customers. And so he was the first national brand store manager at Faraday that used Reflex. And the sidebar story there, you'll get a kick out of this. I remember we connected with Faraday. We closed them as a customer. Their VP of retail introduced us to Jeremy, who's the store manager in Austin. He'd been with them for 3 years, helped them open a store here. The Austin store is one of their highest performing stores. And I get introduced. So, of course, I show up, I walk into the store to meet Jeremy for the first time as we're onboarding them. It's one of our first national brands. And we go to sit in the stockroom in the back. And imagine like this like really thick New York accent. Jeremy's like, "So why are you here?" And it was his attitude. He was like, I don't know who you guys are or what you do. I was just told we're going to use you. And that was kind of our very first interaction. I mean, you fast forward, there was a moment where Jeremy saw Reflex switch from being this Band-Aid to this is part of my team. And he became one of our biggest evangelists very quickly. And so he actually joined our team. You know, we got the blessing from Faraday to bring him on, but he joined our team. And now his role on Reflex is teaching other store leaders how to think about using Reflex and managing a more flexible labor model to help with their biggest store challenges. So that's the retail side. On the marketplace side, there's also, we've pulled a lot of gig economy marketplace talent. Our head of ops, Jeffrey Schwartz, he's awesome. Jeffrey, spent some time at Uber Eats, was on their launch and expansion team there. He was also at Rig Up, which is now Workrise in Austin. And so we're balancing the marketplace operator growth experience when you think of the fundamental mechanics behind the business and our operations team with the customer facing, meaning worker facing and retailer facing retail experience. And I think it's kind of the marriage between the two that make that so important when building something purposely built and exclusively built for retail.
Can you talk about your seed round? I mean, you have VC experience. So I imagine that you went into a fundraise a little bit differently than someone who hasn't had that background. Any lessons you learned from raising a seed round that you think would be relevant to the rest of our audience?
How much time do we have? And I only say that really. Yeah,
Separate episode.
My first company, I learned everything what not to do, and it made fundraising. I think it was really hard. We raised a little bit of funding my first company, but learned a lot of. I didn't understand how venture worked, to be honest, and so spending time in venture, it really helped me understand. More so than I did before, how do VCs think about the decision-making process and what goes into that and how to tell the story, and looking at like what companies successfully were able to raise and what did those companies focus on versus the companies that weren't able to raise or had a harder time, what were they focused on? And I think, we were very fortunate that we've raised 2 rounds. We came out of the gate when I went full-time into Reflex, and we never announced it, but we raised right under $1.5 million for a pre-seed. And that was venture backed by Precursor, ATX Venture Partners, Active Capital, and then some industry angels that were close to what we were doing. And then we announced our seed round this past June, where we raised a $4.5 million seed, led by Indicator, Sugar Capital, Red Swan Ventures, and then all of our existing investors, as well as some additional industry funds in industry angels. Fundraising, I think a big piece of it, we came out and had some really strong momentum out of the gate. I mean, when you look at how we grew, we were growing anywhere from 50 to 150% month on month. And so that kind of growth helped with fundraising. Obviously, there's seasonality with retail, so we had to navigate some of that. But I think that the big thing when we closed our pre-seed and we launched our first market in Austin, that was our very first city. Now we're in several other cities. We're expanding nationally. But when you look at that first kind of raise we had, the goal of that raise was to basically prove out a few things. It was, how do we prove national brands we use Reflex and reallocate part of their labor model? And how do we prove that workers are not only able to work at multiple stores and still maintain a high rating, but is there a desire to? And so the data we had coming out of that really proved that out. And some of the brands we were able to sign and bring on, and the use cases behind that helps set the stage for our seed round and us being able to raise the way we did. So I know that's more specific to us, but when it comes to like tactical advice for founders, I think right now it's a really hard time to be raising. I think that the best advice we got was also, if capital's there within reason, raise more than what you think you need. And we got lucky on timing. I think the other thing is, don't over optimize for valuation. Valuation is important. It's not the driving decision. making factor. I mean, we had multiple term sheets at our seed round, and we didn't take the term sheet that had the highest valuation. We took the term sheet that, frankly, aligned us with the best partners and had the best terms outside of valuation. And I think there's a lot of companies now that are going to have to navigate some serious hurdles based on either valuations that they optimized for or terms that they took, whether it was liquidation preferences or other things, in exchange for a higher valuation.
Are you thinking about how you're spending that capital differently now with the macroeconomic climate? I've talked to a lot of founders who are like, we're growing, we're not going to hire as fast. We're like being a little bit more cautious. Has that changed your perspective at all?
We're very fortunate that our cash position is very, very strong right now, and we've run really lean, considering where like headcount is and the growth that we're experiencing. I mean, we just came off of our Q4, we over 8x'd what we did the previous Q4. And so the buy-in and support we have from our existing investors plus our cash position, we don't have to go out and raise Series A right now if we don't want to in this environment. So we've decided to, although we're getting inbound interest, to basically say, hey, look, unless it makes sense, we're just going to push that off and continue to execute based on the momentum we have. Our cash position, we're not slowing down given the market trends. We're actually playing offense and getting more aggressive. Based on the pull that we're feeling from our national brands, all of our national brands want us to expand to new cities. So we're leaning into that pretty hard. And what I will say is there's some interesting conversations happening with some potential investors on what Series A looks like, as well as insiders that are saying no, don't think about Series A. It's just keep executing. And so what I can say about from a burn and financial management standpoint, we're being really thoughtful in where we're spending, but we're also focused on how do we play more offense, knowing that we're starting to see product market fit on the worker side and the retailer side. And so where can we lean in, and how do we lean in a way that doesn't jeopardize runway, but in fact puts us in a place to go even faster.
Kind of a final question. We've talked a lot about retail. I would just love to know, do you have any predictions for the future of on-demand staffing as a whole?
I think we're all trying to figure this out. I mean, I think it's going to be different depending on the industry. And again, my disclaimer, like anything I've said today, like I could be wrong on all this. And so I think the way that we think about the world and on-demand staffing, I think it really ties to industry. I can't speak in a broader sense across multiple industries, but with retail in particular, I think coming out of COVID, it gave workers a taste of flexibility in a way that they've never had before. And, you look at different kinds of workers. I mean, if you're thinking like the knowledge economy where, we can sit behind a laptop and work from anywhere. That's different when you think the hourly workforce, they haven't had flexibility as much if you're working in a business. I think we're going to start to see more of that. And I don't think that's going away. And when we hear in retail all the time about there's a labor shortage, it's not that there's a labor shortage, it's just people don't want to work the way that they always have. And so I think when it comes to on-demand, I think more businesses are going to have to figure out how to lean into it. It's going to be interesting to see how labor laws also adapt to support that. Because you want to talk archaic and things that haven't changed, like our legal system has not kept up with not only how people actually work, but how they want to work and what that looks like and what technology has enabled us to do. And, in retail, you can't put an independent contractor in brick and mortar stores. It doesn't meet the current labor standards today. And so I think we're going to see some big changes there. So to answer your question in a more succinct way, I think flexibility is going to become one of the most important value drivers for people when they think about their work experience and what they really value. I think we could see with that people having multiple jobs as a function of being able to control their time and saying, hey, I want to work 80% of the time with this business and 20% with this business, or 50-50. Those are the high level of, I think, where things are going. Those are our predictions. I don't know if those are great predictions, but I think I can get much more specific on retail. But I mean, I think the future of retail in particular, retailers are going to focus on what they do best, and that's create, incredible products and experiences for their customers and fan base. I think, fast forward will look like the largest retail employment community where retailers will use us as part of their labor model. And imagine for a worker, you talk about flexibility, they can work at 3 different stores, 10 hours at one, 20 at another 10 here. And with that, unlock the same kind of benefits as a regular employee, including health benefits and a better quality of life. So that's really where I see the future of on-demand going in retail, where I think this is just the tip of the iceberg.
I love it. And if people want to learn more either from you or about Reflex, where can they go?
Yeah, thanks, Dana. I mean, they can find us at workreflex.com. If you're a worker, you can sign up there. If you're a retailer, definitely sign up there. We'll reach out to you. If you want to find me on LinkedIn, I'll make sure we include my link. And then, of course, on Twitter, just at Mike Meyers. I'm not on there as much these days since I'm living in a rabbit hole, but if you tweet at me, I'll still respond.
Awesome. Well, thank you so much for being here today, Mike. I've learned a ton from you. This has been great. Thank you.
Thank you so much, Dana. It's been a lot of fun. Thanks for having us. And just thanks for letting us be part of the ecosystem. We're excited to be a customer.
This podcast was brought to you by Every. We work with gig companies, marketplaces, delivery businesses, and more to pay their workers fast. You can learn more at every.com.